want to do now is start off the day with Paul and Joanne from STR, who are going to present very, very important just to lay the lay of the land of where we're at, the state of the nation and economic outlook. Please welcome the first speakers of Maximum Occupancy Day 2, Paul and Joanne from STR. Please welcome.
Good morning. Hello. Thanks, Adrian. Thanks to the team at Maximum Occupancy for the opportunity to be back in beautiful Sydney at the Fullerton Hotel. Joe and I, as Adrian suggested, we're going to be spending the next 20 minutes or so with you just to give you a bit of a update on performance from a domestic and global perspective. We're also going to centre in, of course, on Sydney performance and other capital cities, as well as regional areas, and then we're going to finish up with a bit of forward data information. But I just wanted to sort of lighten the mood because we're all a bit, uptight Sydneyites early in the morning with a stupid little dad knock joke. So without further ado, Joe,
dear.
I was nervous about doing this.
Oh, no, oh dear.
Knock, knock.
Who's there?
Ida.
Ida who?
I don't know yet, so let's crack into the information and see what's going on. There we go, boom, boom. Come on, share it with me, people, please. All right, so... No, that was really dodgy. Okay.
Yeah.
So on a more serious note, the question on everybody's lips, and we've been having in multiple conversations with industry partners like your good selves, is travel demand back, Joe?
So the short answer is yes. Essentially, if we press the button, because we've got two clickers, apologies everyone. Compared to pre-pandemic levels, globally we've sold more rooms for 16 months and counting. So demand pretty much has exceeded 2019. Mm-hmm. I'm about the positive news, Paul. I'm all about the good stuff. So can you tell me though, will it continue to grow at the same pace?
Okay, so thank you for throwing me under the bus there, Joe. But spoiler, whoops, we've gone back too far. Spoiler alert, go back, back, here we go. The answer, of course, is no. Well, that was to be expected because it was just not feasible to continue at that trajectory of demand growth that we've been seeing. As you can see, it's year-on-year growth we're seeing here, and it has tapered off, it's plateaued. It's still, relatively positive, even in recent months, and of course, that uptick in more recent months, which is predominantly due to the Northern Hemisphere spring season, and that positive uptake in growth still in those more recent months. So the answer simply is no, it has slowed down. And if we look at that at a more global picture, at our global regions, is that going to click through? Is that working? Yep. We get a bit more of a perspective on, you can see again, so just to explain this slide, of course, the big larger circles are showing you occupancy in absolute figures, year to date up to month this year, and then the smaller circles are showing you that rate of growth compared to last year. So you can see there's been a real slowdown. The call-outs here, of course, are China and North America. China, why? Because there's been a slowdown in consumer spending. North America, well in the US particularly, the strength of that US dollar has been predominantly encouraging more outbound travel versus domestic travel. So they've been seeing a slowdown there as well. So Joe, we've talked about occupancy, we've talked about demand and that demand pace. So further to that, average daily rates has been a conversation. Are things getting more expensive?
Well, ADR on a different hand is a slightly different story. So what we see here, positive growth pretty much across all regions except for China. There we go. So a little bit down for China. In the positive and highlighting there the 10% for the Asia region. So that in particular is coming from India and Japan, where things are looking a little bit more optimistic.
Great. Okay, well, that's a great summary again. So we've talked about demand growth, occupancy, average daily rate. But what are the things that are keeping you up, or people you're talking to, what are the things keeping people like yourself up at night?
Paul, thanks for actually asking the question. Last night, it was the load of laundry. It was what was I going to cook for dinner. And I'm sure that there was I was supposed to change my son's swimming lesson.
Okay, but from a more macro perspective.
Sorry everyone, I was getting a little bit personal there. Right, so bringing back to the topic, not me personally. So geopolitics and what is happening around the world. Most definitely there is influence to an international destination based on current situations. Unfortunately, we've had some recent examples of this with our Pacific neighbours. People are making a decision about where they want to travel to and to what destinations. That's certainly influencing them in their decision-making process. Sustainability is obviously a very popular topic. It's discussed a lot. Again, influences both a traveller's decision-making choice as well as an investor's decision-making choice. Airlift. So this is obviously something that continues to expand for our region, but we are heavily reliant on international aircraft and seat capacity into the region. And cost recession. So firstly, it has a bearing on profitability. So in that, as rate increases, is your bottom line also doing the same? And that's obviously very important at the end of the day, is how much money are we banking from an increased rate? And equally, as economics moderate, we listen to the news, we listen to the stories of inflation. Those influences and the outcomes are different because everybody's situation is individual. So just keep that in mind as well.
Yeah, it's great. And so, and just an extension to that, these are obviously very macro level topics that we're talking to here, but the granularity of the information we're going to be showing you in this future slides will certainly talk to some and resonate from some of these topics. Even in the last 72 hours or more, we've had the IT global outage and even, of course, the announcement yesterday, which was obviously to be expected for many, of Joe Biden stepping down in the presidency election. So all these things have a direct or indirect impact to us globally.
Paul, if we zoom in and take a closer look, what's happening here on a macro level for our region?
Yeah, so thanks, Joe. So if we just stop and pause and look at Australia as where we fit in that global picture. So we're looking here in the top left-hand corner, we're going to look and see, domestic travel is still up, it's still positive, albeit very lightly positive. But international travel is growing year on year. So it's already nearly 50% up year on year with 7.8 million visitors in that short-term visitation, which is fantastic to see. So there is some continual uptake. In the bottom left-hand corner, you can see the visitation of Australian versus international visitors. 2% behind where we were in 2019 levels, but there has been a gradual incline versus international visitors, which is still about 16% down. If you look at the top right-hand corner, you can see some of those key source markets or international source markets where some of them, particularly China is a standout, is still quite shortfall there. But in the good news, countries like India are actually seeing some uptake and overcoming some of that shortfall with some positivity there as well. In the bottom right, you can see the consistent theme there of where that space really is in international capacity, still growing. And quarter by quarter, we're seeing an uptake of that, nearly 90% there, but still gradually growing. So the upside of that is it's continuing to increase, and we're seeing an upside to that performance. So Joe, we've looked at things retrospectively here, and we're going to continue on a retrospective theme for a minute before we look into forward data insights. But what are you seeing, what are you hearing in the conversations around performance, and what about people's decision making right now?
I think what we've heard probably most likely so far this year is that expectation is perhaps not quite, we haven't landed where we thought we might. It's not that anything is dramatically different. It's just the expectation, and considering the growth that we have seen, particularly in rate over the course of the last 3 to 4 years, people had budgets set, they had in their mindset that hopefully we were going to see a similar trajectory. Although maybe not quite so crazy as this monkey, I should have had like a slow and stable giraffe or something like that instead of a bit of a crazy gorilla. But the reality is that things have stabilised. They are more predictable and there is less volatility. So, a bit of swings and roundabouts there. So versus last year, the year-on-year growth is still there for both rate and occupancy. But maybe against your budget, there's still a few question marks. So the chance here is just to make sure that for a vanilla year, you're just applying the sprinkles where you can and picking up where the opportunity presents themselves.
Awesome, I love that, looking out for those sprinkles. So what we're looking at here now is actually looking at how that performance is looking. We're looking at here by up to the month of May over the last year or prior year, so year-on-year comparisons. We're looking at the cities, the capital cities, but also calling out Sydney and Melbourne. And you can see that demand growth in each of those left and right-hand areas for the capital cities, and Sydney and Melbourne in particular. But what's interesting also is you can see the growth in occupancy and average daily rate. So it is absorbing that new supply in the orange, which is really great to see. What's also interesting by contrast is to see those regional areas there in the middle are very much plateauing in all KPIs. Great. And now that was from a year-on-year perspective. Now we're looking compared to 2019 levels. You can see that spike in those average daily rates at new levels. By contrast, occupancy levels not quite there. And we're calling out, Australia regions in particular here. So you can see there that influx or that increase in supply is definitely having an impact, whether it be on the capital cities or regional as well. And those occupancy levels in all of those destination areas are still below where they were in 2019 comparisons, albeit the regionals are pretty much on par. But you can see in particular capital Sydney and Melbourne in particular, which we'll slide into in a moment to talk about more specifically, is impacted by those new supply levels there. So normalisation has landed here in Australia, and we can see that here. Even though these bars are quite dramatic, they're actually quite nominal if you look at that, the axis and the x-axis there that's relative to. So, you can see standout months. I suspect that any Taylor Swift fans out there, that can be contributed to somewhat degree of the February month there. But there's also other event periods like the Formula Ones. Easter is also an event that also swapped around like Formula One in Melbourne did this year from April last year to March this year. So these sorts of impacts are what are happening on a more normal, but by and by, things are starting to stabilise now. We're not seeing that volatility or that change in growth as volatile as it used to be. And we're looking at that now from a regional perspective. So again, even though there's movement, if we look at that comparatively to 2019 levels, things are on a longer term looking to return to those more normalised occupancy levels. And we'll talk to that a bit more when we looked at some of the more specific regions by example. But occupancy levels are normalising by and by throughout the country. Average daily rate, however, is a whole different story, as we all know. So that grey bar we see at the bottom is the longer term trend between 2012 and 2019. And you can see the new levels post-COVID. Things came out of the blocks very strong, and they haven't left. 2024 is very much aligned with 2022 and 2023, as you can see. So there's a new normal now when it comes to normal rate, to average rates. And if we look at some of the regional areas I was talking to, you can see that there's going to be some changes to that from one to another. Some certain regions were out of the blocks very quickly, like tropical North Queensland or Bundaberg even. Let's not focus so much on New South. Let's go back to the winners of the state of origin with the Sydney regional areas. So, there's also what we're saying here is that there's a bit of a winding back for some regions because they came out of those blocks so strong, they're winding back now into that more normalised seasonal sort of trend. Oh, we're working? Awesome. And now we're just looking at forward occupancy. We're going to start to talk about a bit more forward demand as well now. So we're looking here at some of the regions again and calling out regions like Sunshine Coast, Great Ocean Road. You can see there's some nice positive trajectory happening there when it comes to forward demand. The winter months coming out of those, looking to spring, there's some positivity there in some of these areas that are starting to see some year-on-year growth when it comes to forward demand. And if you look at that more specifically, again, those little sprinkles that Joe mentioned earlier, those who are keeping their eye on the detail, those who are looking at that forward demand, the way forward demand is shaping, even down to the daily level, because in this example for Sydney Regional, you can see those weekend spikes are different to last year. In the latter part of the 90-day sort of graph there, they're below, but in those former weekends, you can see those spikes are quite high comparatively to last year. So you can see those who are keeping an eye on those and really keeping their finger on the pulse are the ones who are taking advantage of those time frames more than others. Jo. Yeah,
so I'll jump in here and we'll move a little bit away from regional and we'll head back to the capital cities. So essentially here what we're seeing is when you backdate 4 years to pre-COVID times, the evolution of the recovery is shown in two distinct profiles. So we have a couple there that are doing a really low dip and then they're a bit late to the party. And then the rest is essentially a gradual recovery. So the index demand is pretty similar across all of our capital cities currently. Perth has accelerated a little bit to catch up, and Hobart moving back into the fold. So I did touch on briefly before those two that bottomed out and then were late to the party. So Sydney and Melbourne are those, no surprises there, given sort of what occurred during that COVID period with shutdowns and so forth. So last year they did contribute quite significantly to the overall country growth for Australia, and were just 2 points off of their 2019 levels. So for me, this is almost the slide of the deck, and tells a really great story of where we are. We've tried where we can to kind of distinguish those lines there, but you will see how closely the 2024 forward occupancy is running compared to 2022 and 2023. So what that means is that from an occupancy perspective, if these come to fruition, if they actualise, we're looking at a pretty similar result to what we have from an occupancy perspective in the last couple of years. It is a capital city aggregate, so it will change day to day and city to city, but is still, as I said, a really good indication of where we are heading towards, and that stabilisation that we've touched on several times already. So weekdays, like many cities, it's weekdays that are now seeing some of the growth and the return. We had highlighted this many times in previous presentations in terms of where the opportunity sat from an occupancy space. We can obviously now see weekdays have returned. They're the peak there. Weekends have sort of reached their high point. We acknowledge that. A little bit less stability there, but a lot of it, and again, Paul, you have mentioned Taylor Swift several times now. I'm wondering if you have a Swiftie on stage.
Not really.
But yeah, weekends, the demand drivers are a little bit different, but certainly if you can focus around weekends and events and combining the two of those together, still good results for weekends as well. From a rate perspective there, once again, we see weekdays as that standout performer. And a lot of that has to do with the return of corporate market, the return of conferencing and group travel sitting in the weekday space. And many of those rates are obviously locked in quite a fair way in advance at the beginning of the year. But nice to see some positives in that space as well. So the percentage change versus last year. This is a breakdown provided to you by class, property class. All the top classes have kind of hit a pause on the ADR growth. There is still a little bit that's coming towards the lower end of the space there. But in recent times, it's unusual to see the demand growth without the rate growth. But again, it's an indicator of stabilisation, in this case, stabilisation of rate. And obviously not surprising, given the monumental gains that we've had in the last 4 years in that rate space. So what is interesting in this slide, though, is the influence of supply and demand. And in our next slide, Paul's actually going to take a little bit of more of a look specific to some markets and compare how supply and demand affects the outcome.
Yep, thanks, Joe. Yeah, so specifically now drilling into the specific Tier 1 gateway cities of Australia in Melbourne and Sydney. And again, that orange being the new supply to each of those markets is distinctly different to each. And you can also see the impact it's having there. So occupancy levels struggling in terms of where that new supply is bedding down. Melbourne, by contrast, is about 11 points down versus Sydney, which is about 7 points down. And as a result of that, the stronger average rate that's being attained there or achieved in Sydney in contrast to Melbourne as a result of that new supply and the greater supply coming into a market like Melbourne versus Sydney. If we focus on still Sydney and Melbourne, I'm going to swap you from left to right now, Sydney and Melbourne. Still talking about Sydney and Melbourne, we're talking about average rates here, and you can see the shift in average rates. Again, I'm going to call out Taylor Swift. There you go, 4 times.
Swiftie.
February, you can see, is standing out for both Sydney and Melbourne there in terms of the rate growth in each of those months. Interestingly, you can also see a large drop in April. Again, I was mentioning Formula One, and that's that drop in because of the change in month from April last year to March this year for that particular event, of course, which is significant for that area. So the event space is very significant. What's happening, what's driving that compression to these destinations. And speaking of compression, so this is where those who are, again, really keeping their finger on the pulse and keeping an eye on that forward demand, because people are prepared to pay, whether it's New Year's Eve in Sydney or the Formula One in Melbourne or the tennis or Swifty, whatever it is, 5 times. Okay, so basically it's these sorts of things that are helping drive demand that people are actually keeping an eye on, because those compression nights, particularly at 90% or over, are helping really get that sweet spot, because you can see that trajectory in average daily rate growth, 35% back pre-COVID levels, but that's increasing still. So people are still prepared to pay in those peak demand periods. That's the summary of that particular slide. If we break that down into a variety of buckets, even to the levels of 70% or lower, you can see again, it's that 90% compression level on the far right, where that average daily rate growth is significantly growing at a stronger rate to those other compression levels. So it's those who are keeping their eye on the pulse that are really driving those rates. Again, balancing out value propositions or value to the customer, but also yielding those rates privy to the demand at the time. We're looking at segmentation here. So the upside, particularly for markets like Sydney, is that there's international, but here we're looking at segmentation also from a group perspective. So you can see here again, even though the group space is contributing to the progressional increase in occupancy, it's still well below where it was in comparison to 2019 levels. Still about 10% down. By contrast, on the right-hand side, the transient levels is also contributing, but still a lot less. They're a lot closer. So the uptick or the upside of that is there's still those international group meetings that we're driving to those large convention spaces, like this lovely room here at the Fullerton or the greater convention centres, but also your international tour groups as well. So the upside of that is it's still coming and trickling through aligned with our international customers in general. This is simply a timestamp, this particular slide, in forward demand, okay? And this is focusing here on Melbourne. And what I want you to take away from this is that it's basically just showing you how different groups of the week, so your weekday or midweek versus weekend versus shoulder, you can see that on the weekday or midweek bracket, you can see that there's a decline or a dip, if you like, in that short lead time. But in the longer lead, there's some positivity in terms of that 28 and 90-day booking lead or booking more in advance. On the weekend space, it's very much down or dipped down. But again, it's also, we think, more driven towards what's happening in that space. Winter months and winter demand events is also helping to drive that picture. So speaking about winter demand and where that's at, Joe, can you talk us through that a bit more? Oh, sorry, I went ahead of you.
Oh, you want to flick me back?
Go back?
Yes, please.
You keep talking, I'll go back.
Okay, thank you. Thank you, Paul. The question that we get asked a lot at this time of the year is essentially along the lines of, I've had a solid Q1, a good Q1, but what is going to happen through winter? What are we looking like through winter? I hate to drop a bomb here, Paul, but it is already winter, and I know more so than anyone being in Adelaide. I was pleased I only had a jacket, not a
layers,
coat and a scarf, and it's good. And I think you got some good weather coming in Sydney too. But that is definitely a really popular question that we get asked coming into this period. What we have on this particular slide is forward occupancy for July and August. I guess the call out here is that there is quite a spread, but the majority of our major destinations are either flat or up on where they were from a forward occupancy booking perspective versus last year. Our friends at the Gold Coast at the top there, obviously having a good period, and they do come up again in a couple of more slides. But I guess the call out here is that the scale of this graph is only running from -4 to +4. So we're not talking about
monumental figures.
We're not talking about huge changes here. If we look at in isolation, just an example here for Sydney, forward occupancy versus last year. The call out again, and it is something that we've mentioned many times, is that event piece. So you'll see that in this particular period, we've highlighted the FIFA soccer, had a significant effect on occupancy here, both in Sydney and other regions and across New Zealand where the event was taking place. So that's where you need to take the opportunity where you can to grab on and correlate rate and occupancy with any of those other events happening at the same time. Vivid, for example. So here we are, the Gold Coast features again. So this is a little bit of a slightly longer trajectory for forward occupancy. This is in particular the October and November period. So for people like myself in Adelaide who have just gone through a set of school holidays, stuck at home in the winter and the rain, we're already thinking about our Gold Coast holiday next school holidays. So I'd say that that's probably all of us here, maybe Melbourneites as well, taking the opportunity to head up to the Gold Coast. But again, a spread, although not a lot in the negative and not a lot in the positive. We're looking at a pretty flat result from a forward occupancy perspective. In summary, I guess what we're saying here is that there are some swings and roundabouts, there are some ups and maybe some not so ups. We won't say downs, we won't say, that's not what we're here for. We're ups and maybe not so ups. But we have, a little bit of a mixed bag, and it really does depend on your perspective, taking the positives where you can, looking at it glass half full and not glass half empty. Return of stabilisation, some predictability, less volatility, so they are good things. And as I mentioned before, looking for those sprinkles on top of the vanilla ice cream for the year. I want to thank you. I'm sure Paul does as well.
Yeah, no, thanks everyone. Really appreciate your time today.
Normally in this space, you may have seen our Regional Director, Matthew Burke, present previously. Great presenter. Because he was not available, they had to send two as a replacement, so I'm not quite sure what that says about...
Two for the price of one.
Paul, yeah, two for the price of one. Although I did say earlier before when we were chatting that isn't it buy one, get one free? So which one was the bought one? And then which one was the free one? Anyway, right, we have a QR code on the screen. Please, if you, after a copy of the presentation, take the QR code, you can access that via our profiles. Enjoy the rest of the day. There's a great lineup of speakers. And thank you for having us Maximum Occupancy.
Thank you. Thanks, Adrian. Cheers, mate. Oh,
thank you.